Today, fuel is selling for $1,210 in some cases, but of course, everyone should expect more decline from that. But let's shift to our first conversation. External reserves at the moment are standing at $51.06 billion US. It's exceeding the Central Bank of Nigeria's year-end target of $51.04 billion. It has gained 32.62% compared to $38.5 billion in the same period of 2025. The current reserve level provides the CBN with the buffers to support the Naira and settle international obligations. Data obtained from the Apex Bank shows that the Naira gained 1 Naira 35 kobo in the foreign exchange market, with the dollar rate closing at 1,369 Naira on Monday compared to $1,370 recorded last Friday. Now, in another development, credits to Nigeria's private sector increased 81.04%. That's where it stands now as at May 2026, reflecting a modest rise from 80.5 trillion Naira recorded in April, despite the Central Bank of Nigeria maintaining a tight monetary policy stance to curb inflation. The latest data shows that net domestic credit rose to 121.4 trillion Naira in May from 120.1 trillion Naira in April, while net other assets increased to 12.6 trillion Naira from 11.8 trillion Naira. That's during the same period. Let's unpack all of these figures. And joining me live in the Lagos studio is Professor Uche Uwaleke, President, Association of Capital Market Academics of Nigeria, our #1 capital market professor in Nigeria. Thank you so much, Prof. It's good to have you live in Lagos studio.
Thank you, Tolu. My pleasure.
Thank you very much, Prof.
Yes,
it's good to see you here.
I used to talk from your Abuja studio,
yes.
So I'm happy I'm live with you.
Yes, in Lagos today.
Yeah.
Thank you, Prof.
Thank you.
Well, interestingly, I think we're starting on a very beautiful note. Our reserves are at $51.06 billion, and it's even above what the CBN was projecting. What is going on? What is getting right at that space?
Okay, I think it's cheering news.
It is.
It's cheering news in the sense that we know, of course, the uses of foreign reserves. When a country has relatively large foreign reserves, that goes a long way to boost confidence. Boost confidence in the economy. It raises the country's profile. And part of why I said it's cheering news, if you check where we are coming from, in 2023, for example, at some point in this country, net external reserves, which actually is a real metric. Net external reserves was below $4 billion.
Yes,
okay.
I remember.
Yeah, today we hear net external reserves has gone above $34 billion. And if you look at the CBN's website too on the movement in reserves, you notice, just as you rightly mentioned, gross external reserves, come up over 50 billion, $51 billion. And that's sufficient to finance close to 10 months of 10 months of imports. Yes, of course you have the blocked component, liquid reserves, around 50 billion, because there's a small component that's also blocked. But what is important is that it is increasing. So we are witnessing accretion to external reserves. And the question is, you asked, what are the factors driving external reserves? Of course, the main source of external reserves in Nigeria today still remains, crude oil sales, crude oil and gas sales. Of course, you noticed that in recent time, it's just now that we're beginning to hear the drop in oil price. But the months before now, we saw, very huge rise in energy prices as a result of the Middle East crisis. So the increase in the oil price has helped. And also, if you also checked the recent report by the NUPRC on the volume,
volume has also increased.
Crude oil production has also increased. Yeah. The last one I saw was 1.5 million barrels per day. Yes, and according to that report, for the first time we are exceeding OPEC quota. I think they are reporting 1.51. OPEC quota is 1.5. That is excluding condensates.
Okay.
If you include condensates, you are now talking about 1.7. So we are witnessing improvement in oil production as a result of reduction in pipeline vandalism.
And all.
And all some of those challenges. Yeah. So I think that is one. Another source of inflows we have also had is portfolio inflows. Yes, so portfolio inflows.
The hot money.
The hot money. Yes. Again, you saw the reports for the first quarter.
Yes.
$10 billion in the first quarter. Out of $10 billion, over 95% came by way of portfolio investment. So portfolio money, crude oil sales, and there's also remittances, diaspora remittances. Again, as a result of the CBN's measures and reforms, a lot more money now is coming through the formal channels. Remittances are now coming through the formal channels, and of course, it's visible, to the central bank. So that is also being captured, and you can also say that in terms of outflows, maybe within the period too, we have not seen much outflows in terms of debt service, because part of what you also have is also used to service your debt. So if within that period there was reduction in that obligation, and you had inflows, of course you will expect foreign reserves to grow, to rise. So I think it's as I said, it's a positive development for the economy. It's further going to boost confidence. But of course, Tolu, you know that what is more important is the sustainability. And that's why in this country we shall continue to emphasize, we must continue to emphasize diversifying the export base so that the major source of income does not remain crude oil sales. You can see what is happening now. Crude oil prices are started going down because of peace talks.
Indeed, indeed. So that extra cash coming in now, one way or the other, it's going to stop, kind of, or reduce.
Yeah, of course, it's going to reduce. But of course, if we continue to ramp up oil production,
that's where we get the positives.
Yes, so recall that the 2026 budget, it was based on 1.84 million barrels per day, and then $64 per barrel. So as it is, the oil price is still above the budget.
Cool.
Yes, it's still budget reference price. So however you look at it, it's a positive development for Nigeria. I'm sure you read the IMF report, Article 4 consultation, where the IMF was advising Nigeria to slow down on reserve, accumulation, because the IMF feels yes, reserves are growing. But of course, you also know, as you mentioned, in your introductory remarks, that part of why we're having stability today in the exchange rate and forex market, relative liquidity is also because we're having this boost in reserves. The primary reason for accumulating reserves, theoretically, is even to enable central banks to intervene when necessary in the forex market. So now that we have the central bank stability. Central bank now, has that armory, if you like. So you can be sure that for in the near term and even in the medium term, the Naira will remain remain stable. Yes. So, but what I also want to mention in this regard is something to do with what the IMF advised. We now have sufficient reserves, relative sufficient reserves. Of course, if you have something that can finance about 10 months of imports, is you're liquid.
Yes.
Yes, even by international threshold. So what we should do going forward is we should try to, as much as possible, liquidate some of our foreign debts. When they mature, we liquidate them, using the reserves, as opposed to refinancing. I say this because in November last year, Tolu, $1 billion Euro bonds matured, over $1 billion. Okay, we did not liquidate. We didn't take it out. We issued fresh Euro bonds to be able to pay that one. Meanwhile, we had some reserves we could have used.
Okay.
Yes. So the whole idea behind having reserves is for you to use that to meet your obligations. Yes, external obligations when they mature. So when you're having your reserves and you're having the debts and you're borrowing to service the debt, meanwhile you have some reserves you could have used. It doesn't really add up for me. Except where those reserves, you can invest them and earn returns that are higher than the interest you're paying on the external debt you're servicing. I don't know whether I get what I'm saying. So if you can't invest those reserves and earn more, then it doesn't make sense. You need to use the reserves to liquidate those debts so that your debt service to revenue ratio will reduce. Your debt service to GDP will also come down. So it's important that the government begins to think along those lines, central bank in particular, but especially now that we are growing reserves. And mind you, too, part of the money we have in those reserves are loans. When you get external loan, because they're in dollars, the reserves are your stock of foreign currency, so central banks keep them in the reserves. All right, so it's important that when these loans mature, we use the money we are getting, accumulating, because central bank, of course, is sterilizing some of them, use them to pay off our external loans. Yeah.
Well, indeed, you've touched on that stability, because that was my next question, considering our currency. That disparity that we used to have, we've gotten to that point where we are not seeing that much anymore. There's a bit of...
there's a bit of convergence.
Yes,
what you call the premium, parallel market premium has significantly reduced, no doubt. But it is still there. It's still there because if you look at the official rates is around, last time I checked, central bank website, 1369. 136 official rate.
Okay.
Yes,
the other market.
Yes, the other market, the street. If you go to the street you want to buy, they tell you 1390, 1395, sometimes 14.
To buy, but I think to sell is still about 1375 or something.
Yes,
like yesterday.
Exactly. So that tells you there is still that gap is still there. But the good news is that it has reduced considerably from what it used to be. Yes, and I'm sure going forward with this accretion we are seeing in the reserves. With the central bank, again, some of the reforms that are also put in place, it will stay close further. And tied to this again is this idea. Is it an idea really? Or even this claim by the IMF that the Naira is undervalued?
I wanted to ask you if it's appropriately priced. If you think it is appropriately priced, considering where we are.
No, I agree with the IMF. The Naira is misaligned. The value
Where do you think we should be?
The Naira, it should be
1,200, 1,100.
The IMF is suggesting 1,132 or something.
Okay.
I think it should be on about it should be under 1,000. Yes, it should be under 1,000, maybe 900 and something, or at most 1,000. Not as high as it is.
It is now.
Yes. The fact remains that the actual or the current exchange rate today, is just as IMF said, it's not a true reflection of the fundamental value of the Naira. And when I say fundamental value of the Naira, I'm also referring to the macro, if you like, numbers that we have. If, for example, your productivity is increasing gradually, you're witnessing positive, GDP, inflation rate is moderating, compared to what it was before. So when you're having some of these positives, they should rub off, again on the value of your Naira. So these are the fundamentals that hold the Naira, that drive an economy. So if your fundamentals are improving, one should also see that, reflect in the value of the Naira. Particularly now that, we are beginning to earn more, central bank is having reserves to, intervene.
Yes.
But by and large, what still matters at the end of the day will be the sustainability that I mentioned, how we're able to diversify exports to grow productivity on a sustainable basis. That is the real thing that will now bring about make us have the real value of the Naira. But as it is now, I think I'm one of those that believes that the Naira is misaligned in terms of the price. It's not where it shouldn't be as high as 1,300. Yes.
Well, let's move quickly to see private sector credit, which is now rising to about 81.04 trillion naira. Well, my concern with this is, despite the CBN's tight monetary policy stance, we know Mr. Cardoso is not joking when it has to do with his monetary policy stance, but we still see credit rising to 81.04 trillion naira. What do you think is responsible for this?
Yes. Well, it depends on how you look at it. You saw a report that says private sector credit, grew, right?
Yes.
Yes. If you check today's headline too in Business Day, it says that banks are growing. I can't remember the exact way they put the headline, but what they are trying to say is that banks are growing in size.
Yes.
At the same time, credit to the real sector is shrinking. That's today's headline.
So that means it's not even meeting up.
Yes, it's not meeting up. So, and if you read that report, it says that you have 12 banks that are listed on the exchange, 12 of them. And if you check what they reported, the aggregate shareholders' funds of these 12 banks between 2024 and 2025, it grew from 25 trillion to 27 trillion. So banks are growing in size. shareholders' funds. Now, within the same period, 2024 to 2025, the credit to the private sector, firms, households, shrank as a percentage of GDP. Okay, shrank, from 32% to 27%. Of course, we know credit to as a percent of GDP in Nigeria is around 9%. So for the thing to drop over that period also tells you that the tightening too is also, having an impact. Okay, no doubt. But of course, when you talk about, credits increasing, it's also tied to another report, to do with money supply. Yes, if money supply is increasing. Okay, what is money supply? Money supply, technically speaking, talks about currency in circulation. Currency in circulation has two components. You have the cash circulating outside the banks, yeah. And then you have the demand deposits, the current demand deposits, all right, the current account. So that is currency in circulation. Now, if you add to that, if you add your savings and you add your time deposits, that gives you what they call money supply, broad money supply. Narrow money supply, currency in circulation plus demand deposit. When you add the quasi money, savings time, you have the broad money. Then you can also add when you add foreign assets, net foreign assets, you now have what central bank comes M3, broad money. Now, anytime you have an increase in money supply, you should also expect that credit will increase. Why is that so? When banks lend, when they lend money, what happens? They also create money in the process. Because when a bank lends you, let us say 1 million naira, okay, you don't take it out. You put it in, the bank simply credits your account. So that 1 million naira lent to you is now in your account, has also become money, additional money created. For the bank. It's, I get your point. Do you understand? Yes, I do. Yeah, so it is that process. Once you have increase in broad money supply, you should also expect that credit to, generally, should increase. I think that is what is happening. And again, when you're earning more forex, just as we saw in the increase in reserves now, as central bank gets earns forex, or as Nigeria, when we earn this money from crude oil sales, of course, it's kept in the central bank as our reserves. Is that not so? Now, part of that money, when the central bank is, when the FAC, the Federation, when they're sharing the money, okay, in fact, the money is shared in Naira. So central bank converts all of that to Naira, all right? And that is shared. So that process also increases money supply. So as you have that increase in money supply, all right, of course, part of that money will also find its way in the bank. The bank will be in a more position to lend. So it stands to reason that they hire the money supply, okay, they hire the credit to the private sector, all other things being equal. So if you ask what could have caused it, I think the two are linked. First, you saw a report on increase in broad money supply, and you also saw a report in increase in credit to the private sector. So you can see the link now. So they are connected. As your money supply is increasing, credit to the private sector, ideally, other things being equal, should also increase. But if you, again, disaggregate the numbers, critically, you also realize that as a percentage of GDP is still very small, all right? And that's why you find businesses still growing, not having, a lot of them still not having access to credit. It still has to do with this high interest rate environment, high NPR. NPR at 26.5% is one of the highest in sub-Saharan Africa. Let
me take you to my next question, just like that, to wrap this up. What do you think would happen in the next meeting regards to inflation and the MPC?
Yes, well, unfortunately, because of the Middle East crisis, inflation has started ticking up. The last figure we saw from 11.69 to 11.9, sorry, from 15.69 to 15.93 now. 15.93. 15.93 in May. So with this trend in inflation, okay, and inflation expectation, the central bank may not still be in a position to say they want to lose. Okay, so they may want to retain the rates, given what is given the this rise in inflation and the downside risk again to inflation. This elections in central bank may not want to simply drop rates because of election, because of the Middle East crisis is still there, and locally too, this issue of insecurity. So food is still a problem. So central bank will not want to do that for now. So I think next meeting, which is July, right? Yeah, July. Yes, they're likely to also hold rates. Yeah, hold rates, yes.
Prof, I must thank you so much. It's good to see you in Lagos. Professor Uche Waleke is presentation of Capital Market Academics of Nigeria, Capital Market Professor. Thank you so much from Naira State University.
Oh, yes,
thank you so much, Prof. It's good to have you in the studio.
Thank you very much, Prof.
All right, then, still to come.